morning, everybody. Welcome to the Options Trading for Income Weekly Update with Locke and Your Success. Before we get going, we would like to remind you that the presentation is for educational purposes only. We are not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, please be aware that the risk of trading options is substantial, and make sure you understand all your risks prior to placing any trades. And we will be using hypothetical computer-simulated trades in the presentation, which are believed to be as accurately represented as possible. However, live results may vary. If you're watching this on YouTube or some other venue, come on over to our website, check out our programs. We have the super simple spreads, the M3, Bearish Butterfly, Rock M21, and we have some one-on-one coaching programs. Also, become part of our inner circle by joining our mailing list, get your free report, 7 Secrets to Becoming a Successful Trader, and sign up for this free weekly webinar. And as always, stay tuned for our programs that are currently under development. We have APM Squared coming out this month, hopefully. We have our Trading Triangle book coming out in the fall, as followed by our program. We have directional spread trades and a lot of other things in the works as well. Another thing that we're looking at doing is making improvements and streamlining one-on-one coaching so that we can actually get more people in. We have not been able to keep up with demand, and but we're working on that to get everybody in. So just please be patient with us, and thank you in advance for that. Okay, let's take a look at what's going on in the markets here. Last week I was thinking the Russell was going to kind of chop around and run sideways, and that's pretty much what it did. I was kind of expecting the same thing from the other indices, but the SPX kind of dropped down as well as the Dow, right? So for the week the SPX was down. For the week the Dow was down a little bit more than what I expected. We're getting these divergences in the indices where the Russell's going up and everything else is going down. Generally, that's just an indication of confusion in the markets. The long-term traders are not willing to commit. They're not willing to sell. And we kind of have the short-term traders just pushing things around. Really one of the hardest environments to predict. You have to kind of go down to the short-term time frames, and they're relatively short-term support and resistance level driven and so forth. So it's going to be a little bit unpredictable for us for a little while until the divergences come together and we gather at some sort of a support or resistance area between the four. But as of right now, I just think we're going to maintain in this range here in the Russell somewhere between, in the SPX, somewhere between the 17.6, and I wouldn't expect us to break to new highs anytime soon, but we shall see. We shall see. And of course, we have the NASDAQ. If we're looking at the NASDAQ itself is still in a very nice uptrend here. If the NASDAQ breaks out higher, this is, I would say, the lead is going to be the leader in the next breakout. We'll have to take a look on this. A sign that we may be breaking higher and everything would be a NASDAQ breakout. And as far as a breakdown, we have the Dow. Like I said, I think everything's going to break down. If they come down, they'll probably support at the 17.6 level in the Dow. Anything below that would be problematic. The same thing with the SPX, would be about 2065. And of course, the Russell here, if this breaks down, anywhere under 1,200 might be problematic for something more significant, but this is in a fairly wide range as it did the last time we consolidated, and we're just kind of expecting more of the same until some sort of major news comes and breaks us out somewhere. And let's see. So that's basically what I'm thinking in the market. It's going to be difficult to predict. I just think we chop around in this range here, which is a fairly wide range, but that's what we got. And I just got a comment, really enjoyed the SSS presentation last week on Financial Freedom Classroom. Oh, thank you, Raymond, Ray. Yeah, we did a presentation on the super simple spreads. It's really a basic level presentation, and we went over one of the trades in the system, a bull versus bear trade, and that was a lot of fun. We had a bunch of people on who watched that. If you would like to see that, I do not have the recording to that posted yet, but that's on financialfreedomclassroom.com, financialfreedomclassroom.com, just like it sounds. And there's a blog there. It's another site that my wife and I run, kind of dealing with financial issues with people. So you guys go over there, check that out, and we'll be posting that presentation there. I may end up posting it on my blog as well, but it's definitely going to be posted there early this week. So go ahead over there and watch that. And while I'm thinking of other things that I'm doing, and some of you may or may not be aware, but we are covering a $950,000 live trade with the Options Tribe group with SMB on optionstribe.com. To get on that, you need to go to, I'll make a slide for this next week. To get on that, you need to go to optionstribe.com and become an Options Tribe member, and then you can view that presentation there. So all neat things we got going on here. All right, let's take a look at our positions and see what's happening. So we have a little bit of, and that way too you can that $950,000 trade we have going on in Options Tribe is a M3 style trade. It's an M3, what we call a conservative style M3 trade. You can compare that to how we do here with our regular guidelines, smaller trade that's regular traded. Actually, the other trade's doing much better than this particular trade this month. So, but anyway, here we have the website M3 trade. As of Monday, this is the position we were in. We were in this broken wing condor here, or you can say 12-10 butterflies with 10, 12-10, 12-30 verticals. We had a call here, pushing our little bit of delta there, but not bad, sitting at the edge of the 10. If we go to Wednesday, we were exceeding our maximum delta. We were certainly outside the tent here. If we take a look at this, we were out in this position here. So to correct the delta issue, we just did 5, 12-30, 12-40 verticals, which put us into a position that looks like that. Cut us down to about 39 delta. And into that position, then of course we got the pullback on Thursday. There were no adjustments Thursday. And then Friday, delta continued to increase. There we are on Thursday. And on Friday, I did 5 more 12-30, 12-40 put verticals. And if we go, well, I'll just backwards this out so you can see what it looked like before that happened. Before that happened, the position would look like this. We're still outside the tent, and like I said, our delta was pushing a little bit high, so we did 5 more of those verticals here and brought us down to a minus 25 delta. Now, for the last 2 weeks, I think if most of you noticed, you're in the June positions, they have not been giving up on the options pricing. In other words, they've been holding pricing without model. They're not following the theta decay model, as they say. So eventually they're going to have to give up on that at some point, particularly on this position if the market comes down. So you're going to see a big price move at some point fairly quickly. But we'll see what day that actually comes. We never know when that's coming. So that is the M3 trade. This is where we sit as of now. It's down about $284. If we back into the tent here, then this line should rise fairly quickly as long as the move is not too aggressive. So that's what that looks like. If we look at a June rock trade, let's just go back to Monday. We'll show you where we sat there. So our June rock trade, if you remember, I made an entry error. And I was going to correct this with the next adjustment, and I did. What I ended up doing is I did 40-point wing butterflies here instead of instead of 50-point wing butterflies, which was an error on my part. But I figured we would just run with it and see how that worked out. So at this point, we're up $4,100 in a position that looks like this. On Wednesday, we did have to make an adjustment. If we look at Wednesday before adjustment, we have a maximum delta number in this of minus 250, and this is what we're looking like here. So what I did is because I entered this improperly, I actually sold these 4 off and added 4 here to get myself 50 points wide. If I'm looking at the upside, there was no really, because I have no time value past this level. In other words, my time premium in this option is only 48 cents. There's no point in me rolling it out to here to get for 18 cents a time premium, in my opinion. So I just left that there. I lowered the bottom wing to 50, and I also added, let's see, 3 1230, 1280, 1320 broken wing butterflies just to match my position and get my delta down to about minus 180. So if we go back here, let me just clear those out. If I go back, go forward a half an hour, you'll see these 1240 calls down to 1230, and I added 3 of those, and now we have what turned out to be 7 broken wing butterflies up here at 1280, and we have our 10 at 1230. Gives us a position that looks like that, which it looks essentially the same. And like I said, I was just correcting an error I made earlier. If we move to, let's see, oh, that's all we had. So let's move to Friday. There were no further adjustments. And this is now up about 34.17. We're sitting at about minus 126 delta, which is really nice. And if we look at the analyze graph, it looks like that. So nice trade so far for the rock trade in June. We'll see if it continues to stay that way. And that is that for that one. Let's see, the V Condor for June. Let's go back to Monday quickly with that, because they're actually going to go, yeah, let's go to Monday. That's fine. Our V Condor, if you remember, was in a position this month where we got caught in the middle of the V. This last cycle would have been an excellent, excellent month for a regular old condor. It's just this a perfect condor environment. The market's caught in confusion, just kind of chopping around sideways. You can sit in a condor here and do nothing and make a lot of money. The V Condor is modified so that it can handle the larger market movements when regular condor trades tend to get slaughtered or beat up really bad and take huge losses. So there are benefits and drawbacks to everything. The drawback to doing this is if we get an extremely good condor market where the market just does nothing, then it kind of stays in the middle. The trade doesn't really make anything. So it's not extremely harmful, but this is a safer way to trade. Like I said, there is a cost to that when the market's drastically flat, and this is the cost, is we're just not making anything. So anyway, I do let this go negative theta. I do have a delta limit that I can handle when I'm in the V though, and that delta limit was actually hit on Wednesday. So if we go to Wednesday, right, I'm only allowing a positive 50 delta in this position. So this is what we're looking at on Wednesday. And when I get to a positive 50 delta, I'm cutting my delta back about in half. So I did that by rolling the straddle out. I moved the 1240s to 1290 and 1190. So move them respectively. And that brought us down to about half of our minus 50 delta. And now we're sitting in this position here. So essentially there have been no further adjustments. If nothing happens with the market, then we will be expiring this likely at a very small profit this month of $848. Of course, if the market does take off to the upside, then we could have something going on here, but it would have to be an aggressive move. Or if it takes off to the upside a little bit higher as well, I may end up hitting my delta numbers again and rising the V up a little bit more. Realistically, I would be completely comfortable just taking this out, but that would reduce my possibility of making a lot of money if the market really took off. So, I mean, there's pluses and minuses to everything, like we said. But that's what we have there. Let me move on to our next thing here. We got our July Bearish Butterfly, so we'll take a look at that. We'll go back to, let's see, when did we make the move on that? We made a move on the July Bearish Butterfly. I did not set the date, so let's go back to Monday. I would imagine it was Wednesday. So if we take a look at our T-log, yeah, it was the 3rd. So here we are. We are in a Bearish Butterfly. We entered at the 1220. I don't think there were any adjustments to this point. We did have a couple of days where we were exceeding our delta theta ratio. So we knew, and I think we talked about this last week, that if we were to add, what we would do is we would roll this 1220 to 1240 and add a 1260. And that's what we did on Wednesday. When the market came up, we actually hit our add point. So we did a roll and add. And this is what we looked like on Wednesday. After that, you can see we took our 1220 butterflies, no longer there. It's at 1240. We added a 1260. And it puts us in a position that looks like so. You know, the market backs off. This will be doing fine. If it continues to go, it'll still be fine as long as the move is not too aggressive. But that's what we're looking like, you know, even as of right now with the Bearish Butterfly. Let me just go to Friday. Just give you a correct number on this thing from a profit and loss standpoint. So we're looking at being down about $1,500. We're about minus 205 delta, 295 theta. Everything is fine. Everything's in line. And we're just going to kind of wait it out, see what we get from market moves, and we will move forward with that. We have a July M3 on, which we can shift to that right to Friday because there were no adjustments with this. We had 12 butterflies here because we had a relatively flat T+0 line on entry. And we had one 1100 call. I don't believe we had any moves to that. Nope, that was on the 15th. We've just been sitting here. And here's the position right here. So that's looking good. And the last thing we have on is a V Condor for July, which again, with the extremely flat market, is just kind of sitting here and doing nothing. It's up about, about $1,300. And as of Friday, this is what we look like. So, so like I said, everything is going fine. Nothing's getting extremely profitable this particular month because the strategies that I have here are designed to deal with more volatility. And like I said, the challenge for having strategies that deal with large price moves is that when they don't get them, they don't perform quite as well. But have no fear. I'm sure the large price movements will be back before we know it. So that's what we have for all the positions. Are there any other questions? For the July Bearish Butterfly, the roll and add, was it a double test? I do not understand the question, Lewis. Do you have a different way of stating that? Okay. All right. So when I did the roll and add on Wednesday, we'll go to Wednesday. Oh yeah. Okay. Thank you, Ray. Yeah. It happened on the same day. So basically, what I usually do when I do the roll and add is, so if I'm sitting here, which is prior to adjustment, and I know I'm going to roll to 1240 and add at 1260, I'll usually just buy the 1260 and buy the 1240 and then just sell off the 1220. So yeah, we'll do it all on the same day. So that's so that was that. Okay, when I compare the same Bearish Butterfly and Rut with 10 IWM, I find the risk reward on IWM Bearish Butterfly is worse. Yes, the options are not priced as favorably in IWM as they are in the Russell. You know, people think just because it's 10 times the cost or value, and it's kind of got the same price movement that the options have the same juice in them, and they don't. So yeah, you're going to have less. It's going to react slightly different in the IWM. Plus, you're going to have commission issues. So you're better off to stay in the Russell, and you can do a Russell with a one lot, and we show you how to do that in some of the programs too. So you keep it to a $5,000 position here, and that's what, a maximum loss of $1,500 with a one lot there. So I would suggest staying out of the IWM. If you want to use the IWM strictly for practice and you're not really paying attention to how much money you make, then you can play with the trade that way. If you want to play with like a $500 or $150 max loss position, then you can do that. But can the rock be done with $5,000? Yes. The rock can be done with $5,000. It is significantly more, how can I put this? It can be done with $5,000. If you look at the incremental adjustability section in the program, it shows you how to do it with $5,000. The challenge with doing it with $5,000 is that it's from a mechanics standpoint, it's more complex. In other words, you're not necessarily going to be, because you would be doing it, if you're doing a rock with $5,000, you start with one butterfly, right? But you can't put a half a butterfly ahead of it. So we're going to do a synthetic equivalent to doing a half a butterfly ahead of it. We show you how to do that in the program. It's more advanced traders. We're in a catch-22 when we're starting complex options trading, where if you're trading a bigger size, you have a lot more adjustability and you have a lot more options with our regular basic butterfly structures. But when you learn how to, right, so when you trade a lot of money, you have that incremental adjustability. When you go down to $5,000, you still have that adjustability. It's just that it can't be done in the same way. It's got to be done a little bit differently, and we show you that within the program. But it is tough. Are there limitations to the one lot in the bearish butterfly? Again, with the bearish butterfly, if you do a one lot, in the if you're following the bearish butterfly guidelines, in the beginning of the program, there really are no limitations, because when you go from entry to 21 days, you're basically just dealing with adding and rolling butterflies. So whether it's a one lot, we're just showing it. We're dealing with just moving 10 butterflies at a time. So you just reduce that in size to one and do one butterfly at a time. The challenge comes is if you go into expiration guidelines and you have to start making incremental adjustability. When you do that, you run into either having to do too much of an adjustment or not enough of an adjustment. Again, there are ways around that, and it's the same ways you're going to deal with the rock trade, where you come in and you do different types of adjustments rather than rolling butterflies that correct it the same way. And again, that's within the program and the incremental adjustability stage. So you can do that. Let's go back here. Adding to the talk about trading small with trial trades. Do you practice M21 with $5,000 trades? Yes, you can do the same thing. The thing is, we need to go, and this is why the M3 is so important. You need to go to the M3 level and see the options you have on how to control your T+0 line, and then you can back that into controlling your delta on the bearish butterfly trades and the rock trades more easily. In other words, it helps you understand that it's not about where the butterflies are, it's about what your T+0 line looks like. And you can manipulate your T+0 line to emulate what we're doing with the big butterfly positions with a very, very small position, allowing you to trade with $5,000 and do all the same things, but your options placements are going to be different. So that is the really cool thing about doing that. So again, that's in the, I have an example of that in the programs. Let's see, on my July bearish butterfly with 1/3 entered, the first roll point was 1260. Why did you roll in 1290? Okay, all right, so let me rephrase that question. On my, why did I roll and add the July bearish butterfly versus just add the 1240s? I'm going to answer these questions at the same time. On the July bearish butterfly with 1/3 entered, the first add point was 1260 and the first roll was 1290, so why did I roll? So within bearish butterfly guidelines, we have a delta theta ratio maximum. So in other words, if I have my 1220 butterfly, I'm only allowing a delta theta ratio of 1.5 to 1, which means if I have a theta of 71, basically anything over like 115 is going to cause me to roll my butterfly higher. That's assuming I was before the add point. If you looked at the other trade updates, I was at that 1.5 to 1 delta theta ratio a couple of times prior to the add point. So I said earlier that if we do hit an add point, in other words, when I hit that delta theta ratio, technically what I'm supposed to do is take this 1220, roll it to 1240, and do nothing. And then when I hit the add point, to add a 1260. A lot of times with 1/3 on, I'm not that concerned that the delta theta ratio is out of whack. I'm perfectly okay holding it, which was the case here. I'm not really concerned. I wasn't concerned about the delta theta ratio being out of whack until the point where I had to add. Now when I have to add, I don't want to be adding so far behind the market that I'm going to have a problem and never catch the market, especially in this low volatility grind. So the system is designed when you get in a situation where the slope of the T+0 line is abnormally high, which is the way we were. What we tend to do, what the system's designed to do, is actually get up closer to the market. So what we did is how we do that is we roll the 1240 and then add it at the money at 1260. So when the add point came, because I was having delta theta issues, I was rolling to 1240 and then adding to 1260, and that was just part of the game plan. Okay, so you did not have a delta theta ratio prior to doing that. So you might want to look at what you're using for options software, for analytical software. If you're using, and we talk about this too, Thinkorswim analytics do not accurately represent your delta with complex positions. They're fine if you're going to do verticals, but as soon as you get into T+0 line analysis and trying to predict what the price is going to do with price movement, Thinkorswim analytics are overly simplistic. They don't take a lot of things into account, and that's one of the issues with that. Is your delta on your butterflies and your theta numbers tend to be significantly different. So that's why you did not reach 1.5 to 1, is because of the analytical software you're using. You really need to get out and I mean, if you're going to trade these strategies specifically, particularly the M3 option views, you need to use option view analytical software if you're going to use the guidelines, because Thinkorswim is so drastically different. All right, so I believe that is all the questions we have for today. Thank you. Lots of great questions today. I appreciate that, and we will be talking next week. And there's the bell. So everybody enjoy trading this week. We'll talk to you next week.